Actually started the class.
Shall we wait?
No, sir, please start.
Uh, 1-2 मिनट वेट करते हैं स्टूडेंट्स का.
Okay, sir.
Today, good afternoon to all. Today we are supposed to solve a couple of illustration, which is from total income, and after that we will solve a couple of illustration from indirect tax. This is an illustration of 5. You are required to solve it first, and then we will solve together. Try to solve it. Once you got the result, you got the answer, then post your answer in the chat box, and the solution should be in time bound manner. You have 7 minutes time for solving all these things. In any circumstances, whether it is correct or incorrect, you are required to post your answer in the chat box. And then when we solve it together, then you will realize what type of mistake you have done, so that in future for your examination, you are not supposed to do mistakes. With this intention, try to solve this one, and your time starts now.
Sir, content not visible.
Still not visible?
Yes, sir, not visible.
1 minute. Now it is visible. Now it will, Suhani, now it is visible.
Sir, still not visible.
Not visible.
Yes, not visible, sir.
Okay. I believe now it is visible. Uh-huh.
No, sir, not visible.
Not visible, sir.
1 minute. I'm leaving and again joining. Okay.
Okay,
Give me
sir.
1 minute.
Okay.
I believe now it is visible.
Yes, sir. Visible.
Okay. Great. Uh, Swani, now please start to solve this one. The goal is that you are required to solve it. Post your answer in the chat box within the time frame of 7 minutes, and then we will solve it together. If there is any mistake, realize your mistake, then analyze, and then uh, that mistake should not be repeated in your examination. That is the purpose. So that your confidence level would be boosted. Done? Swani, your time starts now. You have 7 minutes time to solve this one. Once done, then please post your answer in the chat box. Last 2 minutes. Okay. Mr. Sigma, a resident in India, aged 32 years, has joined as a state government employee on April 8, 2019. He furnished the following particular for the year ending 31st March 2025. His basic salary 2,49,000. DNS allowance being not forming part of salary 149,400. Other taxable allowance 1,44,000. He owns a house at Pune which is let out at monthly rent of rupees 18,000 per month. Municipal value of the house is 2 lakh. Repairing expenses 28,000 are incurred during the year. Municipal tax at the rate of 10% paid by him. The house remains vacant for 2 months during the year. He sold an urban land on January 20, 2025 for rupees 18,40,000, which has been purchased on July 25, 24 for rupees 9,70,000. This is the short-term capital assets. He has earned saving bank interest of rupees 9,200, interest from fixed deposit with rupees 37,300, lottery income 42,000, that is net of tax at the rate of 30%. We are required to gross up. He has paid medical insurance premium as follow: on his own health, on his wife health, on his father's health. Father age is 84 years, 42,250. For father health, he is eligible up to 50,000, provided he is under old tax regime. And for own plus wife, maximum cap is applicable, that is 25,000. He paid life insurance premium on his own life, taken on 1 at 20 rupees 18,000. Policy value is 150. When some premium amount exceeds 10% of sum assured, that excess should not be considered while calculating deduction under section 80C. Deposited rupees 55,000 to PPF, eligible for 80C, and his contribution to RPF is rupees 15,000. He donated 10,000 to PM National Relief Fund. Compute total income and tax liability for the assessment year 25-26 under the old tax regime. Recompute his income if he has not opted for the old tax regime. That means we are required to solve it parallelly. Okay, so first we are starting with salary income under old tax regime. Basic salary 249,000, DA 149,400, other taxable allowance 144,000. Under old tax regime, standard deduction of 50,000 is available. Net salary income is 4,92,400. Income from house property, gross annual value is, we should consider municipal value 2 lakh, and then monthly rent is 18,000. Monthly rent is 18,000. 18,000 into 12. That means it would be 2,16,000. And due to vacancy, it is only 1,80,000. So can I say that the vacancy is the reason due to which the actual rent is lower than municipal value? In that situation, lower should be considered as a gross annual value. 1,80,000 should be considered as a gross annual value. municipal tax at the rate of 10% of municipal value paid by him. So 10% into 2 lakh, which comes to 20,000. 160 is the net annual value. On this, 30% standard action is available. There is no borrowed capital. So interest on loan is nil. Altogether, his income from house property is 1,12,000. Then capital gain, piece of land was sold by him for rupees 18,40,000. And that cost of acquisition was only 970. So capital gain is 8,70,000. That is short-term capital gain. Income from other sources is income, that is interest from saving bank, interest on fixed deposit, and lottery income. Considering 42,000 is the net of TDS. That is, we should divide by 70% to get the gross lottery income, which is 60,000. Altogether, his income from other sources is 1,06,500. His gross total income now we have calculated 15,80,900. Then we are required to consider deductions. ATC, LIC, we already discussed, maximum 10% of sum assured. So it should be restricted to 15,000. PPF, whatever amount he paid, and contribution to RPF is also eligible for deduction under section 80C. Medical, we already discussed for his own life and for his medical for own and for wife. 25,000 is the cap, and for father, 50,000 is the cap, but the premium is only 42,550. So we should consider 42,250. So altogether, deduction under section 80D comes to 67,250. Contribution towards National Relief Fund is eligible for deduction under section 80G. So we are considering this one. And since he is also getting interest on saving bank interest amounting to rupees 9,200, and he is not a senior citizen, in that case, interest, saving bank interest up to rupees 10,000 is available as a deduction under section 80 TTA. So 9,200 is available as a deduction under section 80 TTA. Hence his net total income under old tax regime, we have computed 14,09,450. On this, we are required to calculate his tax liability. Lottery income is subject to 30%, 18,000. Short-term capital gain is subject to slab rate. So the remaining income we are required to consider under slab rate. First, up to 2,50,000 nil. Next, 2,50,000, 12,500. Next, 5 lakh, it is 1 lakh, that is at the rate of 20%. And remaining amount should be at the rate of 30%. Altogether, his tax liability, including tax on lottery income, comes to rupees 2,35,335. Since income does not exceed 50 lakh, question of surcharge does not arise. And since his income exceeds 5 lakh, question of rebate under section 87A does not arise. Now, on this, we are required to pay 4% health and education cess. Altogether, he is required to pay 2,44,748 as a tax, but the TDS was deducted from lottery income. We should reduce that one. After reducing that one and rounding off, we got our tax liability amounting to rupees 2,26,750. Now, if the assessee has not opted for old tax regime, then what would be the case? The changes would be in salary income, standard action. Standard action would be raised from 50,000 to 75,000 if he is under default tax regime. So his salary income would be 4,67,400. So income from house property remains same, capital gain remains same, and income from other sources remains same. So gross total income under default tax regime is 15,55,900, but under default tax regime, deduction under 80C, 80D, etc. are not available. So his total income is 15,55,900. On this, we are required to calculate tax liability. Lottery income, the amount of tax remains same under both the regime. And then next, on other income, on balanced income, the rate of taxation is first 3 lakh, it is nil. Then next 3 to 7 lakh, it is 5%. Next 7 to 10 lakh, 10 to 12 lakh, and 12 to remaining amount. We calculated tax on under this slab rate. Surcharge cess is not applicable, but cess is applicable. Sorry, surcharge and rebate is not available. Cess is applicable at the rate of 4%. Altogether, after reducing TDS, his tax liability would be 1,45,470. In case if he opt for old tax regime, his tax liability would be 2,50. And in case he is under new tax regime, his tax liability is only 1,45,470. So what should we consider? You know the answer. Done? I believe. Is it clear to all of you? Is it clear to all of you? Now try to solve next one. You have 7 minutes time. Your time starts now. Be careful about the regime under which you are required to calculate. Last 2 minutes. Anyone? Sri Dada furnished the following information for the previous year 24-25. Income from salary, gross 6,02,400. Professional tax deducted by employer from salary. Income from house property, short-term capital loss. There is a loss on sale of gold, rupees 15,000. Long-term capital gain on sale of jewelry, 40,000. Both are adjustable. Interest on bank deposit, including interest on saving bank account, 25,000. Dividend from Indian company, 10,000. Receipt from lottery after deduction, after TDS at the rate of 30%, 70,000. He life insurance premium, he paid rupees 25,000, and then again it is subject to 10% of sum assured. Deposit in PPF eligible for 80C, on contribution to RPF eligible for 80C, but subject to maximum rupees 1,50,000. Medical insurance premium on health and the health of the spouse, both are eligible for deduction under section 80D. Donation to PF National Relief Fund, 20,000. We are required to calculate his income under old tax regime. So income from salary, 6,02,400, that is a gross. So we are required to claim two deduction, that is standard deduction of 50,000 and professional tax. So his income under the head salary would be 5,50,000. Income from house property given 1,40,000. We have considered that one. Again, that is 25,000. Long-term capital gain is there. Income from other sources, interest on saving bank account, interest on other bank. 8,000 is eligible for rebate deduction under section 80 TTA. Dividend and winning from lottery after grossing up, we have considered 1 lakh. And then deduction under section 80C is maximum 1,50,000 is available, 20 for life insurance, deposit PP of 140 and own contribution 20,000, but there is upper cap 1,50,000 would be applicable. So maximum deduction would be available under section 80C is limited to rupees 1,50,000. 80D 18,000 is available because it is within the cap of 25,000. 80G regarding donation, it is 100% deduction is available, and 80 TTA we already discussed amounting to rupees 8,000. So his income is rupees 6,54,000. Now tax liability 25,000 is subject to tax at the rate of 12.5%. That is in case of long-term capital gain. This rate is applicable. Winning from lottery is subject to 30% tax, and remaining income is subject to slab rate. So after considering this, we got the tax liability 51,425. Rebate under section 87 is not applicable because income exceeds 5 lakh. And after adding health and education says, we got tax liability of 53,480. Now, this one for you, please try to solve this one. And for this, you have 7 minutes time, and your time starts now. Last 2 minutes. Okay. Hands up. James took voluntary retirement from State Bank of India on 1st March 2024 under the VRS and received a sum of rupees 25 lakh on account of VRS benefit that would be available as a that would be taxable under that salary subject to deduction and or exemption under section 10C. Later, he started a business of flying, hiring, and leasing of goods carriage from 1st June 2024 by acquiring 3 heavy vessels, unladen weight is 15 metric ton each, and for rupee that is for rupees 12 lakh, and 2 medium goods vessels, the weight is 10 metric ton for rupees 5 lakh, and 3 light commercial weight is 8 metric ton. Although he did not maintain regular books of accounts for his business, the diary maintained by him revealed gross profit of rupees 22 lakh 12,000 for the financial year ending 31st March 25, and he incurred an expenditure of 11 lakh 78,300 on the business towards salaries of driver, repair, fuels, etc. Depreciation on vessel is not included in the said expenditure. What do you mean by this para? That means we are required to calculate income from business, that is the regular, that means whatever your income, gross receipt minus expenditure minus depreciation, we are required to calculate. And another way of calculating business income is under section 44AE. He is supposed to offer, he may offer his income under section 44AE, that is under presumptive section. If we go with presumptive scheme, then in case of heavy goods vehicle, that is where unladen weight capacity is 12 metric ton above, in that case, the income would be 1,000 per month per ton, and for other, it is 7,500 per month or part thereof. So we are required to compute business income both way, and we are required to analyze which option is beneficial for him. During the financial year 24-25, he received sum of rupees 1,72,000 on account of pension from bank, and he contributed a sum of rupees 50,000 to his PPF. The pension is from former employer. It would also be taxable under the head salary. Contribution towards PPF is eligible under section 80C as a deduction if he is under old tax regime. PPF interest is exempt. 35,000 is not taxable. Further, he had two residential house property. One is self-occupied and the other is let out. Fine. During the financial year, he was able to let out his property only for 11 months on the monthly rent of rupees 7,000. Fine. The total municipal tax on the property was rupees 8,000, 50% of which was paid by the tenant and 50% is paid by him. The municipal tax paid by him is available as the deduction while computing his let out income from let out house property. The total that is done. The interest on loan taken for renovation of the house paid by him during the year was 14,000. The insurance premium on the house and the actual repair and collection charges paid are rupees 1,600 and 18,000 respectively, which is not available as a deduction. During the financial year 24-25, he was able to recover the unrealized rent of 13,000 from old tenant. In that case, after reducing standard action at the rate of 30%, the balance amount shall be taxable. Whatever the litigation expenditure, that should not be considered, and a standard reduction is available in this type of situation. From the aforesaid information, you are required to compute the total income of the GEMS for assessment year 25-26, assuming he has opted for the old tax regime. That means ATC, etc. deductions are available to him. So we are starting from salary income. Is getting pension income of rupees 1,72,000 and standard action, since he is under old tax regime, standard action of 50,000 is available. And regarding that is fund from voluntary retirement scheme, he retired in the earlier previous year. So it would taxable in the previous year 23-24, not in the previous year 24-25. That's why we are not considering this in computing income for the assessment year 25-26. Income from house property, the let out portion 77,000. Out of that, 4,000 is available as a deduction, then 30% of it as a standard deduction, and interest on loan 14,000. Altogether, his income from let out house property is 37,100. From self-occupied property, its income would be nil. And from recovery of unrealized rent, after reducing standard deduction of 30,000, 30%, it is 9,100. Altogether, his income from house property is 46,200. Profit and gains of business or profession, since he is not maintaining books of account, so it is advisable to go with presumptive scheme. So on 15th, the heavy metal, there is each heavy metal is of 15 metric ton. So 1 ton per 1,000 per ton per month. So 15,000 into 3 trucks for 10 months. Why 10 months? Because he started this. He acquired this number of trucks in the month of June 2024. So this is for 10 months. From starting from June to March, we should consider this period. And for remaining, it is 7,500 each month per truck. So his business income is 8,25,000 and gross total income is 10,03,200 after adding all these things. Reduction, PPF benefit is available to the extent of 50,000 only, the deposit made by him in the PPF, and his total income is computed at 9,53,200. Done. Very simple. Now you have to solve, you are required to solve this one. You have 7 minutes time to solve this one, and your time starts now. Last 2 minutes. Mr. Rajan, Mr. Rajan is serving in a public limited company, a general manager finance. His total salary for the year ending 31st 3 2025 are as follow. He's getting basic salary of rupees 5,40,000, HRA 1,80,000, transport allowance 12,400. Apart from the above, his employer has sold the following assets to him on 1st January 25. Laptop computer for rupees 20,000, acquired in September 23 for rupees 1,20,000. We are required to provide the depreciation. Car for rupees 3,20,000, purchased in April 22 for rupees 8,50,000. Again, we are required to find out the return on value, and then we are required to whether any purchase it is involved or not. We will compare it with sale price. If sale price is lower than the return on value of the assets, the difference should be considered as a perquisite. On the reverse side, it is not considered as a perquisite. He also owns a residential house let out for a monthly rent of rupees 15,000. The fair rental value of the property for the let out period is rupees 1,50,000. The house was self-occupied by him from 1st January till 31st March 2025. He has taken a loan of rupees 20 lakh for construction of the property and has repaid rupees 1,05,000, including interest of rupees 40,000 during the year. Out of 1,05,000, interest is 40,000. Remaining, we can presume that we can say that it is a payment of principal amount, which is eligible for deduction under Section 80C if he has opted for old tax regime. Further, he sold shares of different Indian companies on 14th October 2024. Name of the company is A Limited, B Limited. The price and purchase cost is given. Sale proceeds were subject to brokerage of 0.3%. That is expenditure on transfer. STT at the rate of 0.10%, which is not available as a deduction. On the sale and purchase value is charged separately. He received income tax refund of 5,750, including interest of rupees 753. The interest from portion shall be considered as income from other sources, and the net what he is got as an income tax refund, excluding interest, shall not be considered as his income. Compute total income of Mr. Rajan for assessment year 25-26, assuming he has opted for the old tax regime. Okay, it is clear. He has opted for old tax regime. So first, we are required to calculate his salary income. Basic salary 540. Allowances, he is getting 1,80,000 as an HRA. Transport allowance 12,400. Then he is also getting laptop. The asset is sold. If it is given for use purpose, laptop facility is not considered as a perquisite in hands of the employee. However, here the employer has sold the laptop to the employee. We are required to find out the depreciated value. It was acquired in the month of September 23 and sold in the month of January 25. So September 23 till September 24, 1 month we should consider, and fraction of the year or month should be ignored. So for the first year, 50% depreciation we have provided, and the amount recovered from the employee is 20,000. So remaining 40,000 should be considered as perquisite in his hands. On the contrary, in case of motor car, rate of depreciation, we are required to consider 20%, and that is for 2 years, 2 completed years. That is from April 22 till March 24, we should consider. Fraction of the year should be ignored. So 2-year depreciation, that is on WDV basis, we got return on value at 680 minus 136 plus amount recovered, we also reduce. So altogether, 2,24,000 is considered as a perquisite on account of this sale proceeds. then standard deduction is available to him at the rate of rupees 50,000, because in case of old tax regime, standard deduction is 50,000. Be careful. If he has opted for new tax regime, then his standard deduction would be 75,000. So his salary income is computed at 9,46,000. Income from house property. Uh, Fair rent was given for let out period 1,50,000, and for 3 months it was self-occupied. But since it is a let out, so we cannot consider that one as a self-occupied. So we are required to recalculate the fair rent for entire year. It is for 9 months. So for 12 months, it would be considered as 2 lakh. And he received rent of for only for 9 months, because for 3 months that was the self-occupied. So rent received is only 1,35,000. We should consider the higher of the one. Municipal tax is nil, 2 lakh, 30% standard deduction is available, and interest on loan is given. He paid rupees 40,000. So 1 lakh deduction is available from this gross net annual value, and the remaining 1 lakh shall be taxable as income from house property. Regarding capital gain, 200 shares were sold at the rate of rupees 250, whereas it was acquired at 120, and that is on to 2nd May 21. Be careful, this is a long term, and this one is a short term capital gain. Be careful about that one. And brokerage should be reduced. So we should reduce brokerage expenditure at the rate of 0.3% of the sale proceed, and then cost of acquisition we should reduce. So 25,850 is my long-term capital gain on transfer of share of A Limited. In contrary, short-term capital gain we have calculated. Sale proceed is 14,000. On this, 0.3% brokerage are considered as an expenditure on transfer, and then cost of acquisition we reduce. We got 5,833. On this, separate rate of tax would be applicable. On this, separate rate of tax would be applicable. Be careful about that. Interest from other sources, it is given. Income tax refund 753. And regarding ATC, the only item which is eligible, that is repayment of housing loan, 65,000 is available. So altogether, his total income is 10,13,440. Now comes to solve this one. Again, you have 7 minutes time for solving this one, and your time starts now. Last 2 minutes. Okay. Srimati Kavita, born on 1st July 1972. She is a deputy manager in a company in Mumbai. She is getting a monthly salary and DA allowance of rupees 45,000 and 12,000 respectively. She also get a house rent allowance of rupees 6,000 per month. She is a member of a recognized provident fund wherein she contributes 15% of her salary and half dearness allowance. Her employer also contributes an equal amount. She is living in the house of her minor son in Mumbai. During the previous year 24-25, her minor son has earned income of rupees 30,000 as rent from house property, which had been transferred to him by Srimati Kavita without consideration a few years back. On 10th October 24, she sold a piece of land for rupees 5 lakh, which is purchased by her on 1st July 2009 for rupees 1,70,000. This is a long-term capital gain. Her employer gave her an interest-free loan of rupees 1,50,000 on 1st 10 2024 to one of her son's wife for purchase of an Alto Maruti car. Nothing has been repaid to the company towards the loan. SBI rate of interest, which is required to be considered as a benchmark rate of interest for calculation of purchase it, which is given as a at percent. During the previous year 24-25, she paid rupees 15,000 by check to GIC towards medical insurance premium for her dependent mother. Compute the taxable income and tax liability of Mrs. Kavita for this, assuming she has opted for old taxes. Fine. First, we are required to calculate her salary income. Her basic salary is 45,000 in 12, comes to rupees 5,40,000. Dearness allowance, she is getting 12,000 per month into 12. So it is 1,44,000. House rent allowance is fully taxable because she is not paying any rent because she is living in the house of her minor son in Mumbai and she is not paying any rent. So entire HRA received by her is taxable. Then purchase it, interest-free loan she has taken rupees 1,50,000 and that was taken on 1st October 24. The benchmark rate is 8%. So 1,50,000 into 8% for 6 months is 6,000 should be considered as purchased in her hands. Employer's contribution is 15% of his basic plus 50% of DA. which comes to 91,800. However, up to 12% of basic plus DA is eligible for deduction, is exempt. So 82,080 is exempt. Remaining 9,270 is taxable. Then standard deduction, she is under old tax regime. Standard deduction of 50,000 is available to her. So her salary income is 7,21,720. Apart from that, income from house property that she is considered as a deemed owner of that house property, this 30,000 should be considered as income of her. Capital gain, sale consideration is 5 lakh and cost of acquisition is 170. Entire net is considered as a long-term capital gain. Gross total income is 10,81,720. From this, we already this is deemed owner. This is not the case of clubbing. In case of clubbing, deduction under section 1032 is available to the extent of rupees 1,500 from income clubbed, minor's child income clubbed in the hands of the parents. But this is not the case of clubbing. This is squarely covered under the definition of deemed ownership. In that situation, the exemption of 1,500 is not available. Then ATC contribution to RPF, it is 91,800 we have considered. ATD, medical insurance we have considered. Altogether, her total income is 9,74,920. Tax on long-term capital gain is 3,30,000. On 3,30,000, the tax would be 12,50,000. However, we know that in case of immovable property sold by transferred by individual, an option is available whether to consider index or not to consider index. However, be careful. The income should be calculated without considering index. Tax liability, we should consider whether to we should calculate in two ways, whether considering long-term index benefit or non-index benefit. So this is the calculation option for tax on long-term capital gain. If we consider index benefit on this, the tax on above would be 16,608. So, and in our case, if we go with without index benefit, 3,30,000 into 12.50%, which is more than 16,608. So my capital tax on capital long-term capital gain on these assets are restricted to 16,608. Be careful. In any circumstances, my income would be 3,30,000. Long-term capital gain would be 3,30,000. My total income would not be changed. The option is only for calculating or payment of taxation. Done. And we should consider 16,608 as a tax. And then tax or other income, the remaining income is subject to slab rate. We calculated at 41,484. Altogether, his income is 58,092. On this, cess is applied, and we got tax liability at rupees 60,420. Be careful. This is one of the important aspects, one of the important amendment made by the last Finance Act. So be careful about this type of calculation. Done. Now, try to solve this one. You have 7 minutes time, and your time starts now. Last 2 minutes. Okay, time's up. Mr. Dilip furnishes you the following income and expenditure account for the year ending 31st March 2024. Receipt, that is fee receipt from Profession is given, rent given, dividend from Indian company, and some expenditures are given. Rent paid includes rent for his residential accommodation of rupees 30,000 paid by check. That means this one. 30,000 is personal expenditure, we should not consider. Hospital equipment eligible for depreciation at the rate of 15%. Opening return on value is given, and the new acquisition of rupees 2 lakh with the date of acquisition is also there. Machine consumed includes medicine, cost rupees 10,000 used by Dr. Dilip's family. That is personal medicine consumed. That is personal expenditure. So we should ignore that one. We should reduce that expenditure. We should add back that one. Rent received relates to a property situated in Mysore, gross annual value. The municipal tax of rupees 2,000 paid in December 24 has been included in the administrative expenses. Here, 2,000 we should reduce from the rental income, and the business income shall be considered at less by 2,000. He received rupees 80,000 per month as salary from Full Cure Hospital. This has not been included in the fees receipt credited to income and expenditure. So this is again separately taxable. He sold a vacant site in August 24 for rupees 5 lakh. The site was acquired in 25. So it is a long term for rupees 50,000. During the year, he paid premium for medical insurance rupees 15,000 for his own health. Computes Dilip's income for the year ending 31st May 2025. We are considering he is under old tax regime. Salary 80,000 into 12 comes to 9,60,000, and we are considering that is on under new tax regime. So a standard deduction of 75,000 is available. So net salary taxable is 8,85,000. House property 27,000 is given as the rent received. 2,000 municipal tax is given, and on this 30% standard deduction is available. So net house property income is 17,500 would be taxable. From business income, the PL suggests net profit of rupees 12,46,000. But in this, we should reduce this one, both of them, because these are taxable under different heads of income. And we should consider, we should add back 30,000, which is included personal rent as well as administrative charges of 2,000 and medicine consumed, which is for family of the doctor Dilip. So net profit as per PL 1246, we should add rent paid for own residence, medicine consumed for own family, and municipal tax because it is already considered over here. Altogether, 42,000 addition are required to be made, and then we should consider depreciation. On this, 5 lakh is the opening balance of the new one since it was not put to use for 180 days during the year. So half of the depreciation is available. So on 5 lakh on opening value, 15%, and for remaining 15% into half would be available. So total depreciation available to Mr. Dilip is 90,000. Then income under head that is we should reduce dividend income and 27,000 while computing business income because these are taxable under different heads of income. And then after adjusting all these things, we got business income of rupees 11,62,000. Capital gain is to be taxable. The long-term capital gain is 4,50,000. From this year onwards, we know that index benefit is not available. Dividend from Indian company 9,000. Altogether, his gross total income comes to 25,23,500. However, deduction in the Chapter 6A, majorly deductions are not available under new tax regime. So total income is only 25,23,500. Calculation of tax liability. Again, there is some page. The page is like that. On this capital gain, we should calculate 12.5% as a tax. However, if the tax liability, a tax at the rate of 20% after considering index is lower, then we should restrict our tax liability to that extent. So we are required to calculate that long-term capital gain considering index benefit. Considering index benefit, the long-term capital gain is 4,28,000. But in this case, the rate of taxation would be 20%. At the rate of 20%, he is supposed to pay 85,709. But if we go with 12.5%, he is liable to pay only 56,250. So we should ignore this one and we should consider 56,250 as a tax liability on long-term capital gain. On other income, we are applying slab rate altogether. Income tax liability is 3,68,300. And on this, we add education, health and education cess at the rate of 4%. And we got the tax liability of rupees 3,83,032. We should round off it. We should, if we going to round off, it should be considered at 0. Done. I believe it is clear to all of you. Now we are shifting to indirect taxation. State whether the following supply would be treated as supply of goods or supply of services as per Schedule 2 of the CGST Act. Works contract, we know that as per Schedule 2, it is classified as a supply of service. Renting of immovable property, again, it is classified as a supply of service. Transfer of rights in goods without transfer of title in goods is also considered supply of service. Job work as well as temporary transfer or permitting the use of enjoyment of any intellectual property rights is also considered as a supply of services. All of them are considered supply of services. Now, Mr. Ram received a design service for his personal use and paid $500 as a professional fees to Mr. Shyam of USA. Explain whether the aforesaid activity of import of service is considered supply under Section 7 of the CGST. The answer is if we import services and payment was done, whether that services are for any purpose, might be for personal use or might be for official use, it would be considered as supply. In this case, the consideration is there. So this services are considered, this import is considered as supply, and accordingly, he is liable to pay tax on that. The import of service for a consideration is considered as a supply, whether or not it is in the course of furtherance of business. So it would be considered as a supply. Is there any change in your opinion if they are brother and there is no consideration? If the supplier is brother and there is no consideration, in that case, we know that Schedule 1 deals with this one. As per Schedule 1, if import of service is from related person without consideration, but that is for the use of business, then that would be considered as deemed supply. Otherwise, it is not. Here, if this is for personal use, hence the question of this is not considered as a deemed supply. A brother and there is no consideration, that is Mr. Ram did not pay any money, the import of service would not be considered as supply because the import of service without consideration is not included in the scope of supply under Section 7(1)(b). Then further, is there any change in your opinion if they are brother and there is no consideration and such design service are for for business purpose? In that case, it is considered as a deemed supply and accordingly he is liable to pay tax on it. Now we are coming to a few numericals part. Now you have 5 minutes time. Please calculate. And your time starts now. Last minute. Okay. Mr. V was following the composition scheme during the preceding financial year. For the first quarter of the current financial year, he gives you the following data from which you are required to calculate his GST liability. If we know that in case of composition scheme, if he's in case of manufacturing, the rate of tax would be 0.5% each, CGST and SGST on total turnover. And in case of trading, it is 0.5% each for taxable turnover, there is taxable supply. And for services, we know that the different rate is applicable. But the problem in that, the rate of GST in general, it is taxable at the rate of 18%. The question arises whether 18% of rate would be applicable or the concessional rate, which is applicable in case of compulsion scheme, would be applicable in this. The problem, one of the restriction on compulsion scheme dealer is that they are not supposed to make interest rate supply. In this example, in this case, Mr. V has exported certain goods, which is considered as an interest rate supply. Since interest rate supply has been made by him, hence he is not entitled for compulsion levy, and then regular rate of tax, that is 18%, would be applicable in his case. So all turnover are subject to 18%, that is 9% for CGST and 9% for SGST. Now try to solve this one. 5 minutes time. Try to solve this one. Last 2 minutes. Okay. We Limited, a manufacturing concern located in Chennai, has opted for the composition scheme for the current financial year. Determine tax payable by the company on the basis of the following details provided by them. Intra-state supply of goods X chargeable at the rate of 5%. Intra-state supply of goods Y chargeable at the rate of 18%. Intra-state supply of goods Y chargeable at the rate nil. Intra-state supply which are wholly exempt. Value of intra-state inward supply liable under reverse charge. Here the assessee is under composition levy. The taxpayer is under composition levy and he is a manufacturer. In that case, 1%, 0.5 each is on of total turnover is considered as his tax liability. But this is not applicable in case when he is supposed to pay tax under reverse charge mechanism. So apart from this last item, which is subject to reverse charge, we are required to pay 5% tax. On other item, we are required to consider 1% each. So, the tax calculation, the amount of turnover is 67 lakh 40,000, and on this, the organization is liable for 0.5% each of CGST and SGST, and on reverse charge, separately 5%, that is 2.5% each of CGST and SGST is liable to pay. So total tax liability is required to pay on account of CGST 63,700 and on account of SGST 63,700. Now solve this one with 5 minutes time frame. Okay, take 7 minutes time. Last minutes. Last 2 minutes. S Limited of Bhopal, having aggregate turnover of rupees 1 crore 15 lakh in the financial year 23-24, has opted for composition scheme and furnishes the following information related to the financial year 24-25. His turnover is below 1 crore 50 lakhs, so he is eligible and he has opted for that one. Intra-state supply of goods A, 5%, 20 lakh he supplied. Then at 0%, it is 28 lakh. Service, 6 lakh. Fixed deposits with bank interest, that is 5 lakh. Intra-state supply which are exempt, 2 lakh. Inward supply liable for reverse charge, this is separately chargeable. Intra-state supply of goods P chargeable at the rate of 12%. So, however, in case of manufacturing, we know that total turnover should be considered, and in case of trader, only taxable turnover are required to be considered. In any circumstances, interest on fixed deposit should not be considered as a part of the turnover, as well as the item which is subject to reverse charge are separately considered at the given rate. Then we are required to calculate the turnover. In case A, that is, he is a manufacturer, all are considered apart from reverse charge and interest. And in case of trader, only taxable component would be considered. That is 5%, 20 lakh, 0% should not be considered, 5% should be considered, and remaining are not supposed to be considered because this is an exempt reverse charge and this is subject to a 12%, which is taxable, so it should be considered. In case of tax trader, his turnover taxable supply is 44 lakh, and in case manufacturer, his total turnover is 74 lakh. On this, he is supposed to pay CGST and SGST at 0.5% each. So, in case of manufacturer, he is supposed to pay 37,000 each, and in case if he is a trader, then 22,000 each. Further, on reverse charge, he is supposed to pay regular rate, that is 5%. So on this 5 lakh, 2.5% CGST and 2.5% SGST would be applicable, which is 12,500 each. Irrespective of the fact whether he's a trader or manufacturer, this would be payable by him. Altogether, in case A, he is required to pay 37,000 plus 12,500 comes to 49,500 as a CGST and 49,500 as an SGST. In case he is a trader, he is supposed to pay 34,500 as a CGST and 34,500 as a SGST. Is it clear to all of you? With this note, I'm concluding this session. I hope you enjoyed this session. We discussed a lot of illustration in today's session, which will boost your confidence, and I believe it will help you in your forthcoming examination. Wish you best of luck for your examination. This is the, uh, I believe it is a last session for this exam on direct or indirect taxation. Thank you. Anyone have any question, any query, please raise in the chat box. So there is no question, no query. Shall I conclude this session? Thank you.